Welcome to the Possible Promise Podcast. Every Monday, Wednesday, and Friday, we go live at 12 p.m. Eastern to break down the complexities of finance and point the way to financial success. Today is June 22nd, 2020, and I am your host, Brandon Oliveris.
And I'm his wife, Christine.
This is episode 5, Investing is Not a Game. Hey everyone, welcome to the Possible Promise Podcast. And so, again, just to reiterate, we're going live. It's now Monday, Wednesday, Friday. So this Wednesday will be our first time doing it on Wednesday. So we're pretty excited about that. If you want to tune in, if you're listening to this later on and you want to tune in for the live broadcasts, you can go to possiblepromise.com/live. And also, I don't remember if I mentioned this on Friday, but we are now on iTunes.
No, you didn't.
Okay, thank you. We're now on iTunes. We're on Spotify. We're on Google Podcasts, which I did not know was a thing.
Yeah.
We're on pretty much everything you could possibly imagine, a whole bunch of which I've never heard of before. And
how about Stitcher?
I don't know if we're on Stitcher yet. I have to check that one. I don't think that one's there yet. But Spotify is there, and Google Podcasts, iTunes, all the important ones. So that's pretty fun. So go ahead and check us out there and subscribe. Now, especially we're doing 3 times a week, so there's going to be lots and lots of content going on. So
your brain will spin.
Probably.
But that's how he is.
I felt so bad for Fridays. Where we talked about options and selling options. That was a pretty involved one.
I had a headache the whole day.
Oh, you did not. Not from that.
I'm just kidding. But my brain was fried for the day.
I know. So today's a little bit lighter, if not that happy. We'll talk about that in a little bit.
You need a sad wah, wah, wah
I know.
sound effect.
I know.
Well, I guess I just did it.
Yeah, thanks. See. So today will be a little bit lighter, I think. It won't be so complicated. But
it'll be a fun Monday.
I realized I almost got the episode number wrong. In the description, I said it was episode 4. I'll fix that before this is over.
Oh, it is 5? Are you sure?
It's number 5. Yeah, I'm positive, because Friday was number 4, and today's number 5, so I'm positive.
Oops.
Yeah, well, at least I didn't say it wrong. I almost said it wrong, but I did not say it wrong. So anyway, today is kind of an interesting day. Friday, we ended the day at, it really dropped by the end of the day. So if you remember, Friday opened up pretty high, slid down as we were broadcasting. By the end of the day, it ended in the negative, pretty negative. Futures opened up last night in the negative, and then they slid up. They kind of regained some. Today, it's been kind of going back and forth from positive and negative. That's kind of a coin toss as to where it is today, or right now. Let's check. So, we have, the S&P up a little bit, up almost 5 points, only with 16 basis points, not very much. The Dow up a whole 19 points. Like not even 0.08%, 8 basis points. NASDAQ, good old over 10,000 again, NASDAQ, up 66 points, 66 basis points. That's funny, that matches. And the VIX is down about 5%, 5.5% today. So it's been kind of up and down all day. It was down a little bit earlier. It started the negative, went up in the positive, kind of has been flipping back and forth. Kind of a quiet day, I think. I kind of think this is going to be a negative week, just personally, and I know some other people will think the same thing. We'll just have to see what happens. But
you did well, though. You did really well.
I
Friday.
did last week. Yeah. Oh, Friday was great because it was. I started the day slightly positive, and then by the end of the day, that big drop really helped me out. So I'm overall. My portfolio right now is slightly delta negative, which just means that things going down will benefit me, but not super negative. So,
but you want to be neutral, right? Is that the
well? You can never be absolutely totally neutral. I'll talk about this in a future podcast.
Yeah.
I'm at like a -3.
Oh, that's good.
So just a tiny bit negative, just because I do think things are going to go negative in the near future. But I try to keep things as neutral as I can. So it's been quiet. I mean, there were unfortunately 30,000 new cases over the weekend. Why the market doesn't care about that, I have no idea. So we're just going to have to see what happens this week. I think the reopening hasn't been going as well as anticipated. I mean, it just depends how you spin it. Some people will say it is, some people say it's not. But I mean, there are... which state was it? Was it Arizona or something like that had the highest number of cases in the entire pandemic, not just since the reopening, but in the entire pandemic.
No.
I think it was Arizona, either Arizona or Texas, but I think it was Arizona.
I thought Arizona was getting the highest resurgence.
Yeah, they are, but they had in one day the highest number of cases.
Oh, I didn't know that.
Yeah. And so obviously not going super great, but the market's just kind of taking a wait and see attitude. I know the European stocks were down about 1% today, but the U.S. market is kind of just hanging on. We'll see where we are by the end of the day. I was thinking I should check at the end of each show too, just to be like, yeah, where are we now compared to where we were earlier?
That would be cool.
Yeah, so maybe
you should have a segment called "And Where Are We Now?"
That's a little over. I don't know. That's a little too much, but just take a few seconds of like, yeah, where are we now?
But sound effects.
I know. You love your sound effects.
Do.
I want to mention, we went, and this is apropos of nothing pretty much, but just to mention, how the reopening is going. We went out, we've been out a few times to dinner.
We're in Pennsylvania, by the way, in case you didn't
Yeah,
know
we're in
that.
Pennsylvania. We went out yesterday. I have been wanting... We used to go to Denny's all the time for breakfast. Every few weeks at least. And so I've just been really in the mood for it now that things are opening up. And we went out yesterday morning to Denny's. It was actually pretty busy.
Considering.
It was Father's Day too, so that had something to do with it. But it was pretty busy. We went out for breakfast, and they did not have my waffles. I was extremely upset. But
the waitress felt so bad.
I know. But it felt almost normal. Now, I still get anxiety about going out a little bit because I just, it can seem normal, and then you never know what happens. But it was just nice to get back out and do all that kind of stuff. So things are... In Pennsylvania, it's not too bad here.
Right, especially where we are.
If I was in like New York City, or if I was in Florida, or one of the higher states right now, I don't think I'd be as comfortable doing it. But we've been trying to get out a little bit more. I don't like going out too often because I feel like you're kind of tempting fate every time you go out a little bit. So I try to be really careful. But I think as long as you're careful, that things are pretty much okay. So, but anyway, so I think we can get into our stock picks, so let's do that right now. Time for our weekly stock picks. You're not dancing, are you?
Uh-huh. It's catchy for a Monday.
Alright, well, Christine's dancing. This is our weekly stock picks.
I couldn't help it.
So this is every week we have our kind of general stock pick for the week, and also an earnings pick if applicable, which earnings are kind of winding down because just earnings season is pretty much over. But there are some still. I know Nike is this week. That's actually not my pick for this week. I have a stock screener I use for earnings, and Nike didn't come up on that. So we'll see how they do, but that's not my pick. But
I like their shoes.
that's nice. I'm indifferent. I don't know.
I know. I don't know if they're actually doing well.
Let me see. I can tell you. I know their stock symbol, NKE. I know today, they're up 2% today, so that's pretty cool. So yeah, I mean, we'll just see what happens with them, but that's not my pick today. I have another one that's been doing really well. So anyway, our first pick is actually Smith & Wesson. Now, do you know who they are, Christine?
Are they a hardware store?
No, they're guns and stuff like that.
Well, I was off.
Yeah.
I've heard the name.
Yeah. It used to be called American Outdoor Brands. Now it's Smith & Wesson Brands. And so that's it's SWBI is the stock ticker. That's my pick for this week. So again, a momentum play. It just depends for me what I'm doing, but they've been doing really well. They're within just a couple percent, about 8% of their 52-week high right now, and they're trading. They've been trading around $18 today. So it's always tough getting into these because, especially with these momentum picks, because if you don't get in first thing in the morning, it'll shoot off. You know, it went up 4% at some point today. I caught it as it was coming back down earlier because I'm like, I'm not going to buy it when it's 4% up. And so right now it's trading $18.20. I bought it $18.13, so not too far off. It was up to like $18.45 or something at some point. Actually, let's see. It'll tell me what the high was today. High $18.56 was the high today, so we're off of the highs. And that's, you know, trade entry like this is always kind of difficult. I try to get in not too high. But anyway, over the last 12 weeks, they've, again, more than doubled. Well, yeah, they've gained 148% in the last 12 weeks. The last 4 weeks, just 71% in the last 4 weeks. So in the last month, they've gained 71%. You know, almost like by 3 quarters.
That's awesome.
So that's pretty nuts. And yet, so my screener also focuses on price to earnings and price to sales. So the price to sales is 1.44. Now, Christine, do you remember what a good price to sales is?
I don't remember.
Okay. No, it's good. I'm just asking. So
I remember you talking about it, but I don't remember.
Under 1 is the best. Under 2 is really good.
Okay.
So 1.44 isn't bad. I've seen price to sales. I'm going to talk about one later where it was like sky high, like 28 or something.
Whoa!
Yeah. So that's not... So price to sales is just the current price versus sales per share. And if it's too high, then you're kind of buying in, you know, the stock is too expensive versus what the company's actually selling. Price to earnings for them is a flat 10.
What is? I didn't hear what you said.
Price to earnings,
okay.
PE, is 10. And the projected growth for the year is 115.85%. So over, you know, pretty much over double is their projected growth for the year. So they've been doing really well. And did I check their RSI? It must have, I think. But I'm going to check it again. Remember, RSI kind of measures, is it growing too fast? And it's getting there. It's at a 70, which is approaching overbought territory. But with a momentum stock, it can stay over 70 for quite a while. If it was like 80, I would worry.
Okay, what's a momentum stock?
Okay, a momentum stock just means... So, you tend to divide stocks into 4 different categories: value, growth, momentum, and income. Okay. And a value stock is one where it has good fundamentals. Like the price to earnings is good, the price to sales is good, all that kind of stuff. And a growth stock is one where it's projected to grow a lot over the next few years, or even within this year. A momentum stock is just one where it's been moving. It's the price has been moving a lot in the last couple months, and you're just sort of trying to jump on the trend and hope that the trend continues.
Gotcha.
Momentum alone kind of isn't always good because you can jump in at the top of a trend. So you want to find something that has kind of a mix of different values, but momentum stocks, it's just looking for things that have really, really grown over the last 1 to 3 months.
Okay.
And that's what momentum is. Then income stocks are your dividend stocks that pay a good dividend.
Okay.
So that's how I tend to divide things.
But not everyone knew that, so at least
Thank
I
you.
didn't.
No, that's good. I say words that people might not know, and I forget.
That's why I'm here.
So yeah, they've been a good momentum stock, and their RSI, like I said, is around 70, which, if you remember, is just approaching overbought.
What is the overbought number again?
70.
Oh, well.
Yeah, but it depends on the stock. It's not set in stone necessarily, and for something that has a lot of momentum behind it, it can hover up there for a while.
Gotcha.
So that's pretty common for momentum stock to have high 60s, low 70s RSI.
So it's kind of a wait to see what happens kind of
Exactly.
thing. Yeah.
So, yeah, I bought in at 1813, and like I said, it was at 1820 when I just checked a few minutes ago.
Wow.
So, yeah, I mean, it's a good stock. It grew by, I think, like 5% in the last week or two.
Well,
So.
Didn't you say something about people are buying guns?
Yeah, and that's...
or at least you told me.
Yes, and thank you for reminding me of that. I was going to mention that. With all the protests going on and people kind of feeling more unsafe and that kind of stuff, I think a lot more people are buying guns. And I heard, and I don't remember the exact numbers or even approximate numbers, but I've heard that gun sales are really up recently. So
which makes sense.
Yeah, it does, and I think that's cool. So this is definitely a good stock to get into to take advantage of that. I was thinking about it a couple weeks ago, but then forgot about it. It wasn't on my radar until it was on my screener this morning. So that is our pick for the week, and then our earnings pick is UniFirst, I believe it's called.
Never heard of that one.
Yeah, it's UNF is the stock ticker. And they, from what I was reading, they basically do like rental and lease and sale of uniforms for workers and all sorts of stuff like that. Their earnings are coming up on July 1st, so next Wednesday.
Is that next week? Oh my gosh.
I know.
Where did June go?
I know.
I'm sorry.
No, yeah, I agree. I don't know.
My God.
Yep. So they have earnings next Wednesday before the market opens. And like I said, I like to try to get in a little bit early. So they were they were down for a little bit today, and I think they're up now. I'll have to check in a second. So they're expected to beat earnings by about 18%. Now, of course, that's not always accurate, but the higher the expected earnings beat, the more chance to me that they're actually going to beat earnings. So I like to look for numbers over at least 2 or 3% earnings beat, and this is 18%, so that's huge. So they're expected to have, the analyst consensus is $1.17 per share, and the expected beat is up to $1.38 per share. So that's a good beat. Their last surprise, last quarter... Tell me. Hang on, it's not cooperating. Here we go. Okay, 9%, 9.64% last quarter.
That was weird.
Yeah, I don't know what happened there. So I bought in at $169.95. Let me see what it's at now. Because I wanted to get it. It was down earlier, like I said. Now, it's at 171.12, up about 25 basis points for the day. So yeah, it was down earlier because the previous close was 170.70. 170.70. 70.70.
70.
So it was down earlier. Now it's up, which is pretty cool. So that's my pick. I think it's not really been moving too much because, again, it's still a week until earnings. So I'd expect that to pick up steam in the next week and just kind of see what happens. So that's my earnings pick for the week. So to summarize again, we have Smith & Wesson, SWBI, for our overall stock pick for the week, and we have UNF, which is UniFirst, for the earnings pick, which we have earnings on July 1st. So those are our stock picks. Let me see how we're doing in time. Actually, not too bad.
For a change.
So, all right, now we will get into our segment. Investing is not a game. So, this is something that's been bothering me a lot lately.
Especially with the story you're about to
Yeah, and, I just want to say, I'm just making sure you don't have anything. So, I'm in a lot of Facebook groups, and, I think it's good. I think it's always good when people get involved in investing, okay? And I referred to this on Friday a little bit. I think it's great when people get into investing. They really should. Investing is really important. What's not so great is when some people start treating it like a game, okay? They just kind of throw money into it and see what happens, and they almost treat it like they're gambling, like it's a casino.
Yeah.
And okay, so just like a casino, you can, let's say you're a gambler, you go to a casino, and you might have huge wins, right? You might be like, oh, I won $1,000, I won whatever, and it's this high you get, right? And you think you can repeat it.
Yeah.
Like for me, I'm pretty good at blackjack, right? Now I have a thing where I am 2 billion% averse to losing profits. It's just how I work. So when I go to a casino, I play blackjack. Slots to me are a waste of time.
You can't see them.
Well, no, but I just mean even in general, even if I could see them, they're a waste of time. You're almost always going to lose. Blackjack has at least the closest to an edge you can possibly get. The casino still has a bit of an edge, but it's almost 50-50.
I like to push buttons. It's okay.
So, I love blackjack, okay? And every time I've gone to play blackjack, so far, I've won. Yeah. And usually I'm up a couple $100, which is pretty cool. I put in a couple hundred, I am up a couple $100, and then I'm out. I don't risk it. I don't want to go back the next day. I don't want to try more. I'm like, I'm in profit. I'm done, right? And I might try again. Like, this is something I do every couple years, maybe. It's not super common. But some people, like my mother, will do slot machines, okay? And she, I was up like $200. I'm like, okay, so why don't you stop? Oh, no. I'm having fun. I'm going to see what happens. And then, inevitably, every time, she loses. Or she might be up like $20, $30. Okay? And this is investors. This is what a lot of investors are doing. Where they'll say something like, oh yeah, I turned, $500 into like $2,000 in just a couple days. Okay, cool, but that's not realistic. That's not going to keep happening. Oh, no, it's really easy, It's really easy. And I saw a post from this guy a week or so ago. I don't remember the details, but he said something like, is this just really easy? Or, am I just really lucky because I turned like $100 into like, I don't know what, some ridiculous number, over 1,000.
Oh my God.
And like, this just seems really easy. And basically it's like, no, I mean, it's just luck.
You might have some easy days.
You might have some easy days. You might jump on some things that really do well. But if you don't learn what you're doing, then you're gonna get in trouble, right? And there's an expression. Now, this is not, well, depends how you measure it. Some people say it's a bull market right now. I say it's a bear market rally. But there's an expression, regardless, everyone looks like a genius in a bull market.
Yeah.
It's easy to gain. It's easy to make profit. I mean, the market's been up 40% in the last 3 months. Of course, it's easy to gain, right? I mean, pretty much anything you pick is going to gain. Even things that really shouldn't, which I'll talk about in a few minutes. And so the real test is like back in March when things are falling 10, 20, 30%, how did you do? How much did you lose?
Even you lost.
Everyone lost. I don't know if there's one person who didn't lose.
Yeah.
But the question is, did you lose everything? Did your account blow up? Or, did you lose like
just
half of your account, or did you just lose a little bit? And I just lost a little bit. And I'm still alive to keep trading. Right? And that's the thing. Like, in 1 year from now, are you still going to be alive to keep trading? And I mean, obviously, metaphorically. Before you pointed out.
No, I know.
Okay. So, are you going to be solvent? Are you still going to have liquidity to keep trading? Are you still going to have cash to keep trading in a year from now? And these people who are taking huge risks probably aren't. Okay, so I'm going to tell a quick story that some people may have heard already. Happened about a week ago. So
a couple weeks, because you told me
it was on June 12th. I looked it up this morning.
Okay.
Yeah. So a week and 3 days ago.
Okay.
10 days.
Oh, wow.
Anyway, there is this 20-year-old kid in Illinois.
Oh, he was here? Why did I think he was in the UK?
No, he was in Illinois.
Okay.
And he lived with his parents. He was home from college. And he got into Robinhood, the Robinhood, trading app. As many people are, many young people are, right? And he was getting into options. Now, I'm going to tell a story, and it's going to make it sound like options are super scary, so I'm going to give a lot of caveats. Like I said in previous episodes, options don't have to be risky, but it wasn't really for this kid either. He just, well, you'll see in a minute. So he basically made a mistake, not even a mistake, but he made a bad trade, and he thought he was down $730,000 in the negative. He started out with $16,000, and Robinhood showed him a negative buying power, a cash balance of negative $730,000. And he panicked, and he thought his life was over. He didn't want to owe all that money, at 20 years old. I mean, how could you? And he went and killed himself. And, obviously, I mean, we don't know what all the details were. To me, I kind of think there must have been other mental issues, because even with someone really down like that, I feel like that's an extreme reaction. I'm not judging him, but I'm just saying, like, that seems like an extreme reaction, but it's what he did. And he left this really... Yeah?
Oh, sorry.
He left this really angry note, the suicide note on his computer, I think, that said, like, how could Robinhood expect me to... why would they give me this much money to lose, and that kind of thing, which isn't exactly how it works. So...
He was assigned, right?
He was assigned, yeah, that's what I'm about to talk about. So what he did... Now, the way it was covered initially, and there was a lot of misinformation about this story, because the way it was covered initially, because I think this is what he thought, was that Robinhood gave him $700,000 of margin. Okay? Now, margin is... that's funds that you borrow from the broker. Okay? In order to trade. You can trade stocks on margin. You have a margin account where you trade stocks, and you can borrow more in order to trade more. Have more leverage. So if you have an account with $5,000, you might be able to trade, or you might be able to borrow $5,000 of margin, right? Mm-hmm. So a lot of people, it was reported that Robinhood gave him $700,000 in margin. That's not true. Because the thing is, options, you can't trade options on margin. You can't you have to have the cash, especially with what's called defined risk strategies, which I'll talk about this Friday. You have to have the cash available to trade that option strategy. So you can't borrow money from the broker and use that borrowed money to trade options. That's not possible. There's a lot of misinformation about this out there. So that is not what happened. He did not borrow $700,000 of margin and use it to trade options. That's not what happened. So a lot of people kind of blame Robinhood, like how could they give him that much margin? Here's the thing with margin, even if you could, margin, you can only borrow as much as how much cash you have. So if he had $16,000, he could have only borrowed $16,000 in margin, right? That's how it works.
It's half or double.
Right, exactly. You borrow however much you have. But that's for stocks. You cannot use it for options. There's no way. Okay? That's not what happened. So what happened was, presumably, he had traded what's called a bull put spread or a credit put spread. What that means, and I talked about calls and puts all last week pretty much, it means that you sell a put at one strike and you buy an offsetting put at a lower strike. So you might have a stock, let's say it's trading at $100, and you might sell a $95 put, and you might buy a $90 put. And all that's for is that it means that you can't lose more than the difference between those puts. You can't lose more than $5. That's all that Robinhood doesn't let you do, just like selling options. You have to have an offsetting option to kind of limit your risk, right? So if you sell a 95 put and you buy a 90 put, you have a $5 maximum loss. Okay? And that's what he did. Now, we don't know which stock it was, but, must have been either a more expensive one or he must have done a lot of contracts. But he sold a bull put spread. Now, when you have a bull put spread, a couple of things can happen. Remember that when you sell a put, you're hoping the stock stays above your strike price. And if it does, then it expires worthless, you keep the money, right? So, if it expires above your spread, and I'll talk about this Friday, so I'm not going to give too much detail, but if it expires above both strikes, then you keep the money that you got for it, the premium. Right? Mm-hmm. If it expires below both strikes, then you lose the maximum amount, which is the difference between the two strikes. But let's take that 95 to 90 spread. Let's say the stock trades at like $93 at expiration. The $90 put that you bought is worthless. But the 95 put that you sold is not worthless. It's actually what's called in the money. And so, because when you sell a put, you're obligated to buy those stocks, you have to buy 100 shares of that stock at $95 a share. So, and then you're responsible for selling it at a loss. So what happened, basically, let's say...
Wait, so what if both of them were in the money or not?
Then you just lose the maximum.
Okay.
Which is the difference. That was the second thing I said.
Okay.
So if the stock was at like $89, then you'd lose just the $5. You can't lose more than $5.
Okay.
Right? So, let's just say, for example, he was trading Apple, which, let's see what that was at. Apple, like today, I don't know what it was 2 weeks ago, but it's like $357 today. So let's just say, for example's sake, that you sold a $350 strike put on Apple and bought a $345 strike put on Apple. So, you might get whatever the premium might be for that. You might get like $1.50 for that per share, so $150, right? And that's cool. So the most you could lose would be $5. But let's say that Apple, on expiration day, on June 12th, traded in the middle of those two strikes, between 350 and 345. Let's say it traded at 348. The 345 put would be worthless, the one you bought, but the one you sold would be assigned. The person who was holding that contract would exercise it, and you would have to buy 100 shares of Apple. Right?
Yep.
So let's say, your 350 put was assigned. You have to buy 100 shares of Apple at $350.
And that's expensive.
You're paying $35,000. Now, repeat that, let's say 20 times. I don't know again but let's just say 20 times, and you can see you can get down to $700,000. Right? And it could have very well been something exactly like that. So you don't have the cash to buy Apple. So your cash shows negative. You don't have the cash for that many shares of Apple, right? So it shows negative. But you have the shares, which you could easily sell and just get right back to normal.
He didn't know that.
He didn't know that. If he would have waited a couple days for everything to settle, he would have seen a negative cash balance, but a few hundred shares of his stock that he got assigned on. All he had to do was to sell that stock, and he'd be back. Maybe he lost a little bit of money, but not $700,000. You can't lose more than what you put into, what you put into an option spread.
So why do they even show that? I mean, I guess it's confusing, because why would they even show that?
Well, and that's part of the issue is they say Robinhood didn't clarify it, and, it was confusing. It takes a few days for everything to kind of settle, right? So you might show, you got a sign on this, you have a negative $700,000 balance, but by Monday, it would have shown back to normal because he would have had a few hundred shares of his stock. Right? And all he had to do was sell those shares, and he'd be, pretty much back to normal. He might have lost a couple hundred.
It would be interesting if they did something like, you have been assigned, this is what'll happen, like an alert pop up.
Right. Yeah, and it just depends. I mean,
I'm not saying people shouldn't be educated.
Right. So most brokers assume, obviously, that you kind of know what you're doing, but Robinhood... the issue, I think, is that I don't necessarily blame them for this. I mean, they did what any broker would do. They don't have a choice in you being assigned on a stock, right? And I was arguing with someone the other day. Someone said, well, they shouldn't have let him sell that many option spreads if he didn't have the cash to be assigned. And I said, that's every broker out there will let you get assigned on a stock even if you don't have enough cash. And then you enter what's called a margin call, where either you have to sell the shares or you have to deposit cash, right? And that's just how it works. If you could only sell enough options, that you could afford to buy 100 shares of that stock, it would be a lot less popular because you wouldn't have that leverage. The point of options is that you don't want to buy 100 shares of that stock. If it does happen, then, well, it happens, and you just sell it and you move on. So someone said, oh, they shouldn't have let him, have $700,000 of stock. Well, they don't really get a choice in that, right? I mean, it's just kind of how it works. So, any broker would have done the same thing. Now, I think where they could have done a little better is... they, first of all, target a younger audience. They target less experienced investors. They've had, just through this whole, the first quarter of this year, through the whole coronavirus and everyone staying home, they gained 3 million new customers.
Did they really?
Yeah.
Oh, wow.
And their app, is very gamified, where it, like when you make a trade, it pops up all this confetti and it makes it very fun, right?
Oh my god, does it really?
Oh yeah. So it makes it look like a game of sorts, and it's it's really, 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 really not. So they kind of target less experienced investors, but But besides that, and maybe, some people were saying maybe they could make it clearer on the actual display what's actually going on.
That's what I'm...
Right, and yeah, I mean, fair. But the basic mechanics of the trade were all normal. Right. I mean, he just didn't know what was happening. And instead of asking someone or, reaching out to Robinhood or whatever...
not that works.
Well, yeah. But he committed suicide, sadly. But nothing wrong actually happened. He wasn't given hundreds of $1,000s of margin. Like, nothing like that happened. It was a totally normal trade. He got assigned on it. It happens. I've been assigned on
yeah, you did.
I got assigned $50,000 or $60,000 worth of SPY. This was like a few months ago.
You about had a heart attack.
And it was like, oh, what's going on? And then I realized, oh, wait, okay, yeah, negative this much, but I have, 300 shares of SPY. Oh, I can just sell them and I'll be back to normal. I actually gained from the whole experience.
Yeah, you did.
So you just have to have experience. You have to have education. But my whole point in telling this story is to say, like, people need to educate themselves, and the example I gave to this person I was arguing with last week was if you have a gun and you accidentally shoot someone with it or yourself or whatever, you don't blame the
manufacturer?
The manufacturer of the gun or the place that sold the gun, as long as they did the requisite background checks and all that kind of stuff, and you have the license and everything went the way it was supposed to, they can't control how you use the gun. And just like options, it's kind of like, using a gun in a way where if you don't know what you're doing, you can shoot yourself in the foot, but that's not the broker's fault. That's your fault. Right? And that's why I'm really trying to break things down in a way that people can understand. But it's also really hard to mess up that massively as long as you know the basics of what you're doing.
And I think the problem is it's so confusing. People try to research it, they get confused.
Right, exactly.
And there's not education out there for it.
Right.
Well, except here.
Well, there is tons of education. There is lots and lots of education. It's just people don't do it. People think this is a game. People think this is easy. And I've had people scoff at me. I was just talking to someone on Twitter the other day who said, oh yeah, I'm up, $3,000 or whatever it was since March, and this is easy. And I said, just wait, I used that quote, everyone looks like a genius in a bull market. Just wait till it falls again.
Yeah.
He's like, oh yeah, you could laugh, but, look at me in a year and I'll be making more money. I'm like, yeah, we'll see,
I don't know if you'll ever know.
Probably not. But you have to take it seriously. So this is, brings me to another point where people... Well, yeah, go ahead.
And what I was going to say about the education thing is I think, yes, there's a lot of education, but it's geared toward people that are more advanced, I feel like.
Yeah, I think it depends.
So I think in these... Like, there isn't anything from the beginning.
Yeah.
In one place.
It's just, it can be difficult. It's so involved, so complex that it's hard to really get into it and figure it out.
I mean, there's no excuse for it, but I'm just saying that I think that's a weakness.
So, what I was going to say was, someone asked a question in the Facebook group I'm in. Does anyone think Shopify is a good value right now? And a lot of people said yes, and a lot of people said no. And I said, well, Shopify has a price to earnings of like 1,600. Let me see what it was. 1601.36 was what it was last week. So it's 1,600. And I said, what does that tell you? And one person replied, says, IDK, but a man shrugging. And someone else says, I don't know, what does that mean?
Oh, God.
And I said, you really should know this. Like, if you're an investor, you have to know this. You can't...
Are you sure you're not a college professor?
Why?
Just the way you act is like a professor. You should really know this.
Well, it's true. And I was really trying not to, lecture them or anything. But it's like, you should really know what a PE of 1600 means. It means they're really, 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 really overpriced. Okay? Now, a stock can be overpriced for quite a while and do okay, but it just says it's not really good value for money right now. Right? And that's, I mean, like I said, under 15, under 20 is pretty good. Some tech stocks will go up to 60, 80, 100, whatever. I think even Apple's, I'm curious, I'm going to look what Apple's PE is. Excuse me for a second. Even Apple's wasn't too bad last I looked. I think it was like 30 or something. Let me look real quick. If it wants to load. But a 1600 PE is just monumental. Come on, you can go. I gotta wait for this.
Is the internet out, maybe?
No, it's not out. This just happens to me sometimes. Yeah, let's try this again. But I'll say it once I get there. But my point was, people should really know what price to earnings is. I had to explain it. This is what price to earnings is, and what a good value is, what a good range is. And that a 1600 price to earnings is by no means good value. You know what I mean? So that was just, it was crazy that they thought that. And my whole thing is like, you need to educate yourself. There's no excuse. Like, people are just getting into this and just buying whatever that the stock of the week is that random people are suggesting, like these penny stocks. And there it goes.
About time, people.
All right, so yeah, Apple's current price to earnings 28.39. That's a forward PE. And that's not bad, right? And even though Apple is pretty high in price right now, not something I would buy at the moment just because they're 10% above where they were pre-pandemic. But their price to earnings isn't that bad, right? But a 1600 PE ratio is just, I would not touch that with a 10-foot pole.
What is a good PE then?
Like I said, under 15 or 20.
Okay.
Tech stocks can get away with a bit higher because people love tech, right? So Apple's PE is really not that bad, like I said. So it just depends. If your earnings aren't keeping up with your stock price, then you're just overvalued, right? And like, investors will only pay so much for your stock if your earnings aren't matching up. So I mean, there's a lot that goes into that, and it's not always the case, but still, a sky high price to earnings like that is just ridiculous. But people really should know that, right? And they just don't. So another good example is there's a stock, Hertz, which I think is a car rental. Is it?
I have no idea.
Anyway, Hertz, HTZ, was trading under $1, and they filed for bankruptcy.
Oh God!
They literally filed for bankruptcy, and in these retail investors, which just means like everyday, amateur traders, just non-institutional, not necessarily amateur, but non-institutional. But these day traders, basically, and it just makes me laugh, just an aside, in the media, it's always Robinhood traders. Robinhood is kind of this euphemism for inexperienced and not know what they're doing. Right? So Robinhood traders, according to the media, bought up Hertz and got it up to like $5 or $6.
Uh-oh.
Okay,
that's bad.
Now, let's say you're Hertz and you're filing for bankruptcy, and basically your stock's going to be worthless. I mean, that's just a fact, right? People are buying it up anyway because they're stupid. What do you do? So Hertz decided, we are going to sell 1 billion shares of stock on the open market to kind of raise some money, right, for our bankruptcy, so that we're not so bad off. So they're trying to do that, and a judge approves it, And finally, the SEC steps in and says, wait a second, no, that's stupid.
And a judge approved it?
The judge approved it. The SEC steps in and says, no, that's not going to happen, right? I mean, even if investors are stupid enough to buy these shares, that you can't do that.
No, that wouldn't be fair.
And now it's fallen back down. Let's see what it is today. Let's see. Today it's at $1.48. So, I mean, the steam's come out of it a lot. It's going to be worthless, right? There's just no way. It's going to be worthless. So, that's, people are buying these penny stocks.
And we have a thunderstorm.
Thunder, I was going to say. People are buying these penny stocks, even ones that have filed for bankruptcy. Just preposterous. I mean, seriously. And are making money off it. And it's just, it's going to bite them back, right? And you kind of feel like the grumpy old man who's like, just you wait, you're going to experience, you're going to really see what happens. But, it's like the young kids who are saying, oh, no, we know what we're doing. And at the moment it might seem like it because they're actually making money, and then it's going to bite them back. But
yep.
It kind of makes you feel like the grumpy old man.
Like you.
Pretty much. But
even though you've only been doing this for...
I know. But, it's
But you
just,
educate yourself, and a lot of people
don't.
But
you have to know what you're doing. So my point is in all this, educate yourself. Read. Research. Follow the news for these different stocks. See what's going on. Don't buy bankrupt stocks. Know what you're doing before you trade options. Now, I'm not saying you have to know everything you do. When I traded my first option, I didn't know everything, but I knew enough. And I thought, well, I'll figure it out as I go. But I did okay, and I think I lost a little bit, but I was okay.
But that's how you work.
Right, that's how I work. But at least know what you're doing, that you're not going to blow up your account. Start with like one contract of one stock, one option, and just see what happens.
Just go slow.
Just go slow. But don't be one of these people who expects to double their account in a couple weeks, or who says, I turned $500 into $5,000.
That's not what the stock market's really for.
No, there's always speculation, but that's just ridiculous, right? And when the stock market does fall, and it will, then if you don't have a good strategy, you will learn very, very, very quickly. So, have reasonable goals, and we talked about this back in episode 2 with Slow and Steady. Have reasonable goals. You're not going to double your account every 6 months. You're not going to double it every year. You may not even double it in 2. Maybe. And maybe you'll do that once in a quick period of time. Maybe you'll do it once. Count yourself lucky. If you made thousands of dollars, if you had a lucky trade, count yourself lucky. You came out ahead. But you won't be able to do it consistently. Okay?
And if you're not good at it and you're not good at it, have someone do it for you.
Yeah, pretty much.
Because it's like, if it's something, because I know for me, I would never actually do it myself.
Yeah.
Because I know that it's just something I wouldn't be good at. And sometimes, if it's something you want to get into, if you can't learn it or educate yourself, then just have someone do it.
And my big thing is, just because you're doing well right now doesn't mean you'll continue to do well. Like last week, I had a 7 or 8% profit. That's huge for 1 week. Now, if you follow some of these other groups of, beginner investors who are speculating, you might think, 7% is nothing. This other person made 200% last week. But that's not reasonable.
No.
And I can tell you, I will not be able to repeat 7% every week. I don't know how I'll do this week. I'm actually a little bit down last I checked for the day. I won't be able to repeat 7% every week. If I were, it'd be insane. Right? I know a lot of people who they might target 3% in a month, and that's a really good return.
Right.
That's a really good return. So just have reasonable, and I know it's not fun. I got into options And I thought, oh yeah,
I'll make thousands every month.
I can do this. This is easy. I can make hundreds of percent. I can make 100% a month.
That's what we thought.
It seemed like it was really easy, and then no. And when I learned that that's not reasonable, that even with options, I can maybe expect 50 or 60% in a year, if that. It kind of took the wind out of my sails a little bit. It's like, what's the point? But you have to have reasonable expectations. And maybe you'll do better. And if so, that's awesome. And maybe you'll do worse. And if so, that's fine. Right? I mean, you have to. What I would do is not even target a certain percent, especially if you're just starting out. Just do your trades. Keep a record of your day-to-day portfolio balance. Okay? Include, if you add in more cash, then obviously you include that. But keep a record of your day-to-day portfolio balance and just see, how much did I make this week? Without judgment. I might have been up 5%. I might have been down 10%. I might have been up 20% if you had a really good week. But, how much did I make this week? Okay. How much did I make this month? How much did I make in the last 3 months? I had a guy tell me, yeah, I think I can do, I don't even remember what the percentage was. He said, some ridiculous amount every year. And I said, okay. I said, he said, that's what I've been doing. I said, have you actually been doing it for a year? Oh, no, I've been only trading for a month. Oh. That's not long enough. 1 month's results are not enough to try to guess what your, entire year is going to be. You can't do that, so actually keep records. How much did I actually do over the last month, 3 months, 6 months, 1 year? And just keep the records. And then you can look back and say, yes, I did this in this year. This is how much I made, or in the last month. And then you can start to look at, can I improve these results? Can I tweak what I'm doing to do even better? But you're not going to do 100% in a few months. You're just not, and if you do, it's going to be a one-time thing, right? And it's easier to do with small accounts because, when you have a small account, you might be willing to risk a little bit more. And we're going to talk about risk management, position size, and all that kind of stuff in the future. But just have reasonable expectations, educate yourself, know what price to earnings is, price to sales, all these different values, how stocks work just on a fundamental level, and then know how options work. What's an option delta? We'll talk about that stuff in the future. How do you target a 70% probability of profit? How do you know your likelihood of winning? How do you know what your max loss is? How do you know what your risk to reward ratio is? That's all stuff you should know. And we're going to talk about all that stuff in the future as we go on. And I'm really excited for all that. But you should know all these things. At least, if not before you start trading, at least as you're trading. Learn as you go if you need to. That's how I work. I don't have patience for waiting. Yeah. But at least start small. If you don't know a thing about options, or you just started reading about it last week, don't put half your portfolio into call options that you heard are going to do well. You're going to lose everything. Do one contract, one options contract. See how it goes. If you win, awesome. And I'll have lots of tips about that as we go on. But that's just my advice. Educate yourself. Know what you're doing. It's not a game. This is serious business. This is serious money. You can stand to make a lot, and you can stand to lose a lot. And so if you don't want to lose a lot, put in really strict strategies and plans that will safeguard you against that. Because that's really what it comes down to. So hopefully that makes sense. I know it's not really fun. A lot of people just want to gain. But unfortunately, that's just not reasonable. No. So... if you have questions about this, feel free to ask. We have the show notes. You can go to possiblepromise.com/5 once I post them. So, feel free to ask questions. I'm always happy to answer. And, my job, I'm trying to really target especially beginners who are just getting into this and who want to learn more. So feel free to ask. That's great. That's what I want to do. I want to answer your questions. So I really hope this helps. And again, we are on iTunes now. We're in all sorts of podcast places. So subscribe to us. If you're listening to the recording, then feel free to join us live, Monday, Wednesday, Friday at 12 Eastern at possiblepromise.com/live. And with that, we hope you have a wonderful couple days. We'll be back on Wednesday for our next episode of the Possible Promise podcast. Thanks everyone for listening. Bye.
Have a good day.
Night.
Something.
Bye.
Bye everyone.